answering your questions about retirement. It's Money Talk with Michael Eastham.
I have an investment I bought from a broker almost 10 years ago. It's a real estate investment that pays some dividends, but we invested $35,000 and the last statement says it's worth about $20,000. I keep getting letters from people wanting to buy it, but not for very much. I'd love to get out of it, but not sure what's best to do.
Well, this question sounds like it's related to a private investment called a real estate investment trust. And one of the reasons that there could be a disparity between the $35,000 that you invested and the $20,000 that it's saying is the value on your statement is that the cash flow that you're receiving may not all be dividends. Some of it may be a return of principal. And that's different because that's not taxable. But you do have to understand that there are some potential implications down the road if you hold on to that investment and then subsequently sell it or it gets cashed out. You may have some tax consequences. So you'll want to give us a call to talk about how that might impact you down the road. The other thing is that, yes, it is difficult with a private investment like this. It is difficult at times to liquidate it. And I understand that you just want to get out of it. Some of the folks that are trying to reach out to you are really bottom feeders. These are guys that are trying to purchase your investment at a lower dollar amount than it's actually worth because they know that at some point it's going to cash out at a higher value. And they're trying to take advantage of folks who, like yourself, you may be discouraged because you know that you put in $35,000. The statement says it's only worth $20,000. That could just be a paper statement or a paper loss. When the actual liquidation comes into play, you may get back $35,000 or you may get back more than $35,000. You may get back $20,000. Who knows? The point is that the investors that are contacting you are trying to get a good deal. They're trying to make money as well. So keep that in mind. And then the other thing is, usually, and you'll have to contact the investment advisor themselves to find this out. Many times these types of investments will have a quarterly tender, which means that there is an opportunity each quarter to cash out of your investment. Now, the caveat is they're probably not going to give you 100% of the money of the value at that time. They'll discount it by 10% or 15%. So that's something that you're going to have to look at as a cost if you really want to get out of that investment. So if you do have additional questions or you'd like us to look at the statement in detail, we'd be happy to help you out there. Just give me a call and we'll schedule a time to get you some answers. Thanks again for that question.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.